My name's Roman Royer, Assistant Vice President and Loan Officer Supervisor at Midwest Heritage.
Hi, my name is Hannah Ross. I'm a loan officer with Midwest Heritage.
Here today to talk about some mortgage refinance options and when it makes sense to refinance and the hot topics of what people should look for before they consider refinancing. So here with Hannah today, she's one of our mortgage loan officers. And Hannah, when you're talking to customers, what are some of the things that you guys review before you decide if a refinance is correct?
So I take time to dig deeper into their financial goals. Are they looking to save money each month? Are they looking to pay off their loans sooner? What's their current rate? And run some scenarios with them.
Definitely. Everybody's situation is different. So definitely a good thing to take a look at all those things. And some major reasons, I guess, for refinance. Obviously, rate is a big one. And right now, everybody is kind of hearing that rates are dropping. Whether they do or don't is kind of up in the market right now. But I think it's really important to kind of get those goals set. So if it is hey, I want a lower payment, does that mean just a lower interest rate? Can you re-amortize out so that you've got a longer term to reduce those payments? So a lot of things that we can kind of take into perspective. And I think part of that is the debt consolidation piece. Everyone's kind of looking for that right now just because budgets are getting tighter. So I guess, Hannah, when you're reviewing those, what are kind of the key things you look for when someone asks about debt consolidation?
Usually, I like to run scenarios with them prior to pulling credit. So if they have a good idea of where their monthly expenses are. So what do you have for credit cards each month? Do you know what rate you're paying? If we ran a scenario and paid those off, how much would you be saving rather than paying the interest each month on those?
For sure, definitely. And I know a lot of people get into those 0% credit cards for 18 or 24 months. And then after that, it's like, oh my gosh, I have to pay this off. What am I going to do? And if it's a large balance, certainly refinancing that or maybe taking out a home equity loan to wrap a lot of that debt up is a good option. If you have a really good first interest rate right now, I know a lot of people who refinanced or purchased a home kind of that post-COVID era have really great interest rates. So they may not want to lose that, but we also have some home equity and home equity line of credit options. Do you want to just tell them a little bit about that?
So the difference, home equity loan is normally a fixed rate product. That would be if you're doing maybe some home improvements, debt consolidation. We also offer a line of credit that you would have available to you for a certain amount of years to use as you wanted. I think of it as similar to a credit card. So you're using it, paying it off over the time of the loan.
Yeah, and those HELOCs, home equity lines of credit, like she was saying, are secured. So it's a lien on your home, so you get a ton better interest rate. So I think our interest rate on those right now is sitting at 7.5% versus maybe the 28 or 29% that someone's paying on a credit card. Or if you were to take out a personal loan, typically those are anywhere from 10 to 20% interest too. So it can definitely save a lot of money there. And as far as taking a look at those situations, when people have that goal of, hey, I just want some more financial freedom, maybe it's payments, maybe it's getting those things paid off earlier. Super important to keep that at top of mind, I think, for any loan officer. That's something that we definitely focus on to kind of create those good relationships with customers and make sure that we're setting them up for success. So I guess what are some other key takeaways when someone comes and asks, hey, I want to know if I can refinance? What are some qualification factors that you look at to make sure that we're going to be able to help them out?
Well, I usually like to start with any idea what your credit score is? What do you think the value of your home is? Because that's important factor because likely we're going to need an appraisal on the property. So overall loan to value is important.
Yeah, definitely. Definitely. And debt structure, I think, is super important just to kind of look at too. We certainly want to help out everyone. That's kind of our goal. But we do get into those situations where maybe we have to do a couple loans to get things kind of worked back around. And I think it's important for people to know that, you do have a lot of options out there when it comes to these things. So, maybe a straight refinance of your mortgage isn't necessarily the best option, but we do have other things, secured loans, the home equity loans, home equity lines of credit that we can use to really kind of restructure everything to make sure that everybody's comfortable. And kind of want to go back to the rates going down for a minute. Obviously, there's a lot of talk in the market about, interest rates are falling. And I think it's important to kind of just note that, when the Fed says, hey, we're lowering interest rates, it's not necessarily just tied to our mortgage rates. Mortgage rates typically follow the 10-year treasury rate, and it kind of ebbs and flows with the market a little bit, but it's a much more stable rate so that you're not coming into the bank and you've got a 8% mortgage rate one day and a 3% mortgage rate the next day. But we do see changes with that. So when you're talking to customers, obviously when you're doing that initial conversation, you may not lock a rate in right away. There are quite a few things that we do have to figure out. So can you go through just some of those things that may affect your interest rate, whether that be loan to value or their debt structure?
So loan to value definitely is one of them. Credit score is also another impactful item, and overall debt to income as well
Yeah,
are things that we look at
for sure.
initially.
And I think it's important for people to know also that those credit scores are super important. And we may have to take a couple steps to be able to get to a point where, hey, we've got a great credit score, we've got that good loan to value, to be able to really set them up in a good position for future. But I think that's really where those long-term goals and having that discussion and making sure that everyone is aware of those long-term goals and how we get there is really important. Everyone likes to have fun things and likes to have some extra spending cash. So if we can help you kind of get that set up for that long term, that would be our goal for sure. So as people come into your office, Hannah, what do you kind of tell them, maybe somebody who's going at this for the first time as a purchase, or maybe they own a home and are going looking at a refi, kind of process from start to finish? Can you give us just a brief rundown of how that would work?
Yes. So when purchasing a home, we initially have you start the application. We do pull credit. The application is normally good for 90 days because credit usually will expire. We always like to refresh the information, go back through to make sure in case something has changed with your job, if it's been a while and you haven't purchased something at that time. Once we collect income documents, we stick those on file. And once you find a home, we usually ask that you give us at least 30 days to get the loan closed for you.
And I know a lot of realtors, especially nowadays, are looking for some type of pre-qualification letter when people start to look for homes. Can you tell us a little bit about what goes into that pre-qual letter and what that actually means for the borrower?
Pre-qualification is based on the information that you've provided on your application. So as long as everything is accurate, we should be good. The pre-qualification letter, I usually tell my borrowers, my realtor, if you want me to adjust it, only takes a few minutes. Wouldn't want to make an offer on a home and your pre-qualification letter be a higher amount. So just adjusting it according to the property that you're interested in purchasing, which again is another perk of working with a local lender than calling an 800 number.
Definitely, definitely. Speedy service. It's
Yes.
what we aim for. And then going on the rest of the mortgage process here, very similar for a refinance. Obviously, refinances typically take longer because you're not trying to look for a house, so a speedier process. And I think a lot of people have maybe a misconception that it's a little more work than it actually needs to be. Working with our borrowers, we can get a lot of the information up front, make sure we're in a good position. Like you said, you always talk to them to make sure that we're going to qualify in the right way. So, really it can be a pretty painless process. So if someone is thinking, oh my goodness, I don't want to do a refinance because it seems like I'm going to have to go through all of this financial mumbo jumbo again, we take a lot of that burden off of our borrowers. So really, if they can provide us, those income documents and their asset statements, we take it pretty much from there and handle the rest of it. Obviously, there's always one-off situations that we run into, but try to make that as easy as possible. And I think the biggest part of a refinance that some people may or may not know is depending on the value of your home will be a deciding factor on what type of valuation we have to do. Obviously, everyone dreads having the appraiser come into their home and take pictures of things. Obviously, those all stay confidential, so those appraisals don't go anywhere else but with us. But there is other options. If you've got a really great loan to value, 80% or less, we can do an AVM, which is just kind of an automated value where they just come take pictures of the outside of the home so that we can make sure we still got a valuation, but it's a little less intrusive. And I know back several years ago, we could get appraisal waivers. Those aren't really as viable anymore with the market right now, but definitely some great options there just to ease the burden even more. And I don't think it's ever a bad time to refinance as long as it makes sense globally. Obviously, we look at the total situation, your debt structure, what you have out there for payments, what you owe on your home now and what that payment is, and then also the amortization. Sometimes if it's financial freedom people are looking for, shortening that amortization up to maybe a 20 or a 15 with a lower rate could be a great option to get that home paid off earlier, and then you get to skip that house payment, which is always a great thing. And there are more than one type of refinance. So when people are kind of thinking about that, some people are just looking at rate term and some people are looking at cash out. Can you kind of give us a little differentiation of what that means to the borrower as far as potentially the rate, and then what that process looks like if they are looking to get some cash back from their house?
Sure. With the rate term, that would be refinancing the balance of your loan. So there wouldn't be any cash available to you at closing. Rates are normally a little bit lower than with that compared to doing a cash out refinance. Cash out refinance would be for debt consolidation, any home improvements that you may have, and the rates are usually a little bit higher with that option.
Yeah, pulling that equity out, taking that loan to value a little bit higher typically forces that rate up a little bit. But I still think it can be a great option for somebody who maybe is at a higher rate at their mortgage right now, or like you said, has that debt that's outside of the maybe their mortgage loan that definitely could benefit from being at a lower rate. So it is a case by case basis for sure, I think, for every borrower. But we do love to kind of go through those. And I think when people see the numbers, sometimes they're a little bit shock and awe of, oh, wow, that's how much interest I'm going to save, or, oh, wow, that's what my monthly payment can be. And it's just a great feeling when we get to help them out in that way to maybe ease the stress of monthly payments a little bit. Right now, obviously, there's a lot of uncertainty in the economy financially, just with some things that are going on. So having that little bit of stress relief can be a huge advantage. And then I know that she kind of works up some examples for us today. Can you give us just kind of a brief breakdown of kind of a loan amount refinance, what that interest rate drop could mean?
So roughly, if you're at a loan amount of 250,000, let's just say you're at a 7% interest rate. If we were to drop you to, we'll say 6%, the monthly savings on that would be about $165 a month that you're saving. And that's if you were to go back out to a 30-year term. The interest over the life of the loan would be about $60,000. So let's say you originally started, and another scenario here. Let's say you originally started with a 30-year term. You've been paying on it for 2-3 years. And you're like, well, I don't really want to go back out to 30 years. So we drop you to 25-year. A little bit shorter term. The savings on that is $50. So you're still saving each month, and the interest over the life of the loan savings would be 150 or 115,000. So
There you go. Yeah.
so every little bit helps.
Definitely. Yeah, shortening up that amortization can make a big difference too. Just having that principal get eaten away at a little bit faster. And I think another way, and this is something that if you do have a good rate right now, it doesn't always make sense for everyone to refinance. But maybe if you are looking to pay your loan off a little sooner, just paying a little bit extra towards principal can make a huge reduction in that interest that's paid over the life of the loan. Because any of that additional payment that you're making each month over your standard payment is going to go to principal and is going to pay down that loan even faster. So, maybe it's not a refinance that you're looking at right now. Maybe it's just, like we talked about earlier, that kind of future financial freedom of not having a mortgage payment. If you can tack on a little bit each month, it's going to make a big difference when you come to the end of the loan.
Roman had mentioned being able to pay off your loan sooner by making additional payments. If you're ever wondering how to do that and what that looks like, you can go to the Midwest Heritage website and find a loan calculator available online.
Yeah, lots of great resources out there. And it does cost a little bit to refinance a loan because there is some, obviously, the appraisal that we talked about, title work, things like that, updating the mortgage, getting that re recorded. There are some costs that go into that. But when we're looking at the overall picture, we do take that into account, obviously, when we're talking to customers. Typically, we like to see those costs recouped in about 10 to 12 months, so within a year, um, which helps them kind of gauge, hey, this is when I'm really going to start seeing the savings after I do that. Obviously, we can refinance most of those costs into the loan, so it's not out of pocket for the borrower at all. But just like to make everybody aware that there are costs that go into it as well. And I think that maybe is a little bit of a misconception too. A lot of banks will say, "Oh, there's no fees, no costs," and you really want to look into that to make sure that that's actually true. We like to be very upfront, obviously, with government regulations too, and the disclosures that we have to send out. A lot of those things are very apparent, but just want to make sure everybody's aware of that. And a refinance may not be necessarily correct for someone who's looking for debt consolidation either. There are cases where, if you can just kind of restructure your budget, which we're happy to kind of go through that with you too. But if you just kind of do some budget restructuring, that may be more beneficial than going through the refinance process. A lot of individuals say, hey, I've got, 3 or 4 credit cards that I need to get paid down. If we can kind of do some reorganizing and you can get those paid down in 5 or 10 years, might be more beneficial to go that route than doing a new 20 or 30-year mortgage to get those paid off. So refinancing may not be right for everybody, but it is a great opportunity to check that out. Come see us, and then we'll take a look at the situation in total just to see if there's maybe another option. We also do other secured loans. If anything from an auto loan, if you own your car, we can maybe pull a little bit of cash out of that, set you up on a shorter term with a much lower interest rate than you'd be paying on a credit card. We do unsecured loans as well. So just depending on your situation, we want to make sure we kind of take a global look at what you've got going on out there, to make sure that we're actually putting you in a better situation before we do anything like that.
Some other things that we look at when helping a first time home buyer or a previous homeowner shop for a property when we're calculating the debt to income is we also take an estimate of taxes and insurance. So the taxes and insurance will kind of vary depending on the property. So I always like to have my clients, as they're shopping for homes, send me the address and I'll put together a scenario based on that property. So then I can go to the county website, take a look at what the actual taxes are. Homeowners insurance is a little tricky as it's kind of gone up over the last year or so.
Yeah, and that can make a big difference in people's monthly payment. I know insurance is a hot topic right now, just across the board, and always a great opportunity, especially if you're looking for a new home or if you're in that refinance situation, to revisit your insurance. We always advise customers to look at least once every 24 months just to make sure that, one, your home is covered. As everybody knows, home values continue to increase, which is a great thing. But as your home values increase, you want to make sure that your insurance increases to match that, because you don't want to get stuck in that situation where maybe your home was worth $300,000 5 years ago, but it may be worth $350,000, $360,000 now, and you want to make sure that your insurance is there to cover that. Also good to just reshop and see if you've got the best coverage available for what you're looking at. I know a lot of those insurance agencies, Midwest Heritage included, really sits down with their customers and says, hey, what do you need covered? What does this look like for your situation? What coverages you need, to make sure that you're not paying for anything extra, but you're not missing out on anything too. And yeah, taxes going into that payment can be a big bummer for some people if you're in those high cost areas. So it is something that we have to factor into that overall debt structure too. So maybe if we're looking to refinance, it's hey, do we need to term this out because insurance and taxes are getting a little bit more expensive than we thought they would be? It's another opportunity to maybe adjust that payment a little bit, and then to provide yourself some cushion for any future increases as well. And Hannah, so when someone comes into you, and oh, this is going to be great because you just had this happen. When you're looking at doing a mortgage refinance, obviously people are inundated with advertisements all the time, right? About, let's do this, here's the lowest rate. We've talked a little bit about some of the qualifying factors that work into what that interest rate may be. But what would you say are the biggest advantages of working with someone like us, a local community bank, local lenders, versus working with one of the big name brands that have all the flashy advertisements?
Well, working with a local lender, local bank, you have us available to you when it's convenient for you. Personally, I like to make sure that the realtors that I work with and clients that I'm working with have my cell phone number. A lot of times they're out shopping on the weekends. Maybe a big box bank won't be available on the weekend where they can call or text me anytime. So that is important. We can also help with servicing issues in the future. Get a letter regarding your escrow and you're confused about it, you reach out to your local bank here, stop in, and we're able to help you. Another benefit of working with a local lender would be that we have access and knowledge to local programs that may be available to help you purchase a home. We offer several different programs for down payment assistance. So if you're a home buyer, maybe you don't have 20% down, maybe you don't have 5% down, there are programs out there that you may qualify for that we can review with you to see if we can help save you some money and get you into a home.
Yeah, definitely. And to piggyback on that, if we run into that situation where we maybe don't have quite as much money for down payment, obviously the standard is kind of a 20% down, which can be a lot. If you're purchasing even, a $300,000 house, that's $60,000 that you have to come up with to have 20% down. And for a lot of first-time home buyers, having $60,000 saved just isn't a reality at this point, which we completely understand. So we do have mortgage insurance that we can rely on too to kind of bridge that gap a little bit. So maybe if you have 10% saved, or maybe it's 7%, whatever we can kind of get out of that asset there, we want to make sure that we're putting as much down toward the house as possible because we do get a better rate that way. But mortgage insurance is a great option to allow you to put less down, but to still make that purchase. It's just a monthly cost as normal insurance is, but gives you some added benefits there of not having to wait to save. And I know right now rent is expensive too. So if you're trying to save but you're paying a lot in rent, it can definitely kind of elongate that period of, hey, we thought we were going to save up in 5 years, but now it may take 10. And I don't really think there's a lot of benefit to waiting sometimes. I know a lot of people are sometimes a little shy to take a look at purchasing a home. But that's what we're here for too. Definitely come talk to us and just let's kind of lay out the roadmap of maybe we're not ready today, but with, a little bit of assistance, maybe restructuring a couple things, we can be ready in a couple years to make that big step. And I would say another big advantage of going with a local lender, especially with Midwest Heritage, we do all of our processing and underwriting in-house, which I know that may not sound like a big deal to a lot of people up front, but it is super important that, if you do have an issue, or as a loan officer, if one of us is working with someone, all the underwriting team, the processing team is all in-house, and we have direct access to them, which is great for us to ask questions to make sure we're getting the right information. And then for closing too, they're going to be working with us to set up the closing, and we're going to take them through the end of the process. And I think that makes a huge difference in getting passed from person to person. Who am I sending documents to? Who am I closing with? Because doing any type of mortgage is a big deal. It's nothing small. So to have that go-to person as to, hey, I've got a question about this, and if we can't answer it, we've got people sitting in desks in the building who can answer those questions for us. And I think that goes a little bit into after the loan closes too. Obviously, we service the majority of our loans, which may also not sound like a huge deal, but when you are going to do your annual escrow review, or if you have an issue with a payment, you know that you can reach out to Hannah and say, hey, Hannah, I've got this issue. Can you help me with this? And Hannah's going to say yes, which is fantastic. So you've got that go-to person for not only through the loan process, application to closing, but also through the life of the loan. You know who your go-to person is.